How is it that gold is dropping while Bitcoin is running up? Is it a stretch to say that folks are selling gold for Bitcoin? Yes, yes. I mean, we've kind of dealt with this with actually our own, just people in our network, high net worth individuals telling us we want to sell gold for Bitcoin. And Bitcoin is the new gold. Bitcoin is digital gold, has the same properties of gold, but more efficient. It's like if somebody could design gold but make it better, that's Bitcoin. And Bitcoin is easier to custody, to transfer, and just invest in. Bill?
Okay, so we've gone full circle, right? The gold guys, Rickards, who wrote the Currency Wars books, they had a field day with Bitcoin on the way down in 2018. Okay, now people are starting to say, okay, I'm giving up on precious metals to go crypto. Now, I've always been a big fan of we're all doing the same thing. We all think the same way, right? So I think if people are dumping gold specifically to get in crypto, I think that's a bad reason to dump gold. It could probably create a buying opportunity in gold and silver, because I do think there will come a day where you'll be depositing your gold with, say, the state of Texas depository to keep it safe from any federal confiscation. And you'll be able to write checks against that precious metal one day, just like having, crypto in your PayPal account. So I do think there's room for precious metals. There may be a frustration trade going on right now, but frequently those frustration trades, when they end, people go, oh man, maybe I just should have kept a little, right? So
Right.
yes, crypto, we're pro crypto, but I'm not going to make the mistake or the poor etiquette of trashing gold the way the gold guys trashed us.
Yeah, I agree. Now, even though I don't own any gold, our indices love gold. They love gold as a hedge for crypto and the dollar. Let me see if I can pull this up here. Give me a second. Okay, so if you go to pretty much every index on Token Metrics, every index has exposure to Pax Gold. Why is that? Because, and this also answers a question we've been getting a lot, because people are saying, why aren't the indices just getting all the top coins and just putting them in that index? Because that's not what smart investors do. Because, for example, right, if you go here and say, just show me all the quarterly, actually quarterly likes lots of stable coins, but let me see which one. Okay, let's do monthly, right? Why not just get the top 10 and call it a day? Well, one thing when it comes to building a portfolio, you can't just invest in silos. You have to look at the total correlation of the entire portfolio to see if there's any downside risk and any risk in general in the portfolio. What does that mean? Because why invest in two assets if they pretty much follow the same movements, right? Meaning that if one goes up, the other goes up. If one goes down, the other goes down, right? It will be much better to have an asset and has possibly close to the same return, but is uncorrelated, meaning that if Bitcoin goes down, it goes up, or it does not go down as much, right? So that's what the portfolio is doing. It's looking to hedge, because if we go back to September, when the market went down, almost every crypto went down. But guess what didn't go down as much? Gold, Pax Gold, right? So going back to the indices factors in both the ratings, so the quant grade and trader ratings, but also tries to build a fully diversified portfolio, a portfolio that will weather the storm no matter what the market is. Whether the market is going up or down, it will perform well. Right? That's the idea behind the indices. It's not meant to maximize 100x gains as quickly as possible, because while those could happen in crypto, there's a lot of risk that comes with that. So you want to have a portfolio, kind of like, maybe Bill could speak to this. Ray Dalio has his all-weather portfolio, I think it's called. right? Basically, a mix of stocks and bonds. So think of as the indices as the all-weather indices. Our goal is to give you a portfolio that will perform well when the market is booming and will protect your wealth and capital when the market is crashing, right? For example, looking at this here, this pretty much is a very conservative portfolio actually, but it has Bitcoin, Ethereum, and Pax Gold, and the rest is stablecoins, right? Now we've already kind of shared our thoughts on stablecoins. You don't have to have all these stablecoins, but it's basically just telling you have money in cash, whether it's in one stablecoin, a few, or US dollars, but have basically for the next month or so the best portfolio for risk to reward ratio that's conservative, but will also give you upside is holding Bitcoin, Ethereum, and gold, essentially, right? So I want to put that out there. Now, that should not be confused with the ratings here, because these ratings are for people who want specific trades, right? Somebody who wants to trade for the next month or so. This is what it's basically telling you. It's telling you look into all these different assets. Bill, your comments?
Okay. So when it comes to building a portfolio, right? In other words, our analytics, they're really sophisticated, and they're taking things into account through math that say you could also come with via some common sense. And when common sense matches math, it's a powerful idea, right? So, I've gone through kind of the astronaut case for crypto by looking at things like Chainlink and Ethereum, right? Ripple. But, there's also this idea that, lockdowns, presidential inauguration, issues about the election. I mean, can you imagine the reversal in the US dollar if somehow Donald Trump continued to be president? Right? I mean, depending on what blog you read, these things out there in the normie world, they matter. Now, our quant models are sophisticated enough to pick it up. So then as sort of the token metrics human analyst, how do I put it all together? Well, you could say, hey, I want to have some Bitcoin. I want to have some Ether, maybe some Chainlink or some XRP or whatever your favorite coin is, really, right? You can have half or 60% in your favorite coin, just the way you'd have 60% in stocks in a 60-40 portfolio, right? Finance 101, they're going to teach 60 stocks, 40 bonds. Our AI is suggesting something similar. Your favorite coins and money in cash or in stable coins. Now, you can keep the money in stable coins. And the logic would be, hey, if DeFi 2.0 takes off, I want to make sure I can be there to get in on UMA, Bancor, or any synthetics, or any of these smaller alts that take off, right? Because again, there is uncertainty out there. So I have a lot of bullish charts and I like to present those because I get excited about that. But there's a reality out there that, it makes sense not to have all your chips pushed in at this time. Okay. And there's also the idea that, we're coming up on obviously the end of the week. We're obviously coming up on the end of a month, right? So I'm interested to see how quant grades change, right? And if they do change, having some capital available to make some moves makes sense.
Well said, Bill. Okay, so comment here. The price of gold gets suppressed by investment bankers to keep people from panicking, in my opinion, says Awoken on YouTube. All right. Well, thanks for that comment. I'm not sure what to think. I guess, Bill, what do you think about?
There's not enough. It's the worst kept secret in the world that there isn't enough physical gold in the world to fulfill all of the paper obligations. So everyone who has a piece of paper that says I own gold, you may not. And that could include gold deposited at a central bank like the Fed. Okay. There just isn't enough physical metal out there. So there are theories that, the price is suppressed because God forbid gold ever went to 5,000 and everybody wanted to take delivery and it's not there. So that's a historic problem in gold. I don't know how it gets solved. I don't know if the price is manipulated. I'm a crypto guy, right? But owning gold and physical metal in an environment that's as uncertain as the one we're in, particularly when we're talking about potentially a US administration that could like indiscriminately print money. I mean, the QE, the perma QE Fed chairman Janet Yellen is now in charge of the Treasury and they're selling gold. Yikes.
Yeah.
So for what that's worth.
All right. A few comments here. Yes, Quant Grade went live on Friday. Illick says banks were fined for their manipulation of gold and silver. All right. Thanks for sharing that. Just curious, did your model see the XRP and XLM run up? I got lucky with HODL for 2 years. Yes, they did. So we actually do have videos on our channel for the last, I think there were 1 or 2 weeks ago, covering XRP and XLM. So go back and watch those videos. Congrats to everybody. Even Bill's TA was very, very bullish on XRP for a while. That's why that video has been one of our most popular videos this month.
Right. Specifically, what happened with XRP is I took a look at the chart, and then as XRP started to run up, it showed up in the Token Metrics day trader portfolio. So that's when I said earlier in the show that sometimes stuff will pop up in day trading and the long position can turn into a hodl because it takes off.
Yeah. So
that's why I'm paying extra special attention. I actually start my day by going through all of the daily portfolios because ironically, that's been where, that's where our AI is the quickest to pick up stuff that's changing, right?
Yeah.
So again, for what that's worth, right? Like I looked at Binance, Coinbase, all of them, looking for ideas.
Right, and we highly encourage you to take advantage of the 40% off that expires tomorrow at the end of Cyber Monday. That code is anniversary 2020, all caps, and the number 2020. You get 40% off of Token Metrics. That can be applied to the monthly subscription. It's a one-time use coupon. So if you do it for monthly, you won't really be getting the maximum benefit because you're better off applying it for the annual plan because you get both 25% off for the annual plan plus 40% off. So massive, massive, massive savings you get. Then, okay, comments from Tom. JP Morgan settles lawsuit that accused firm of spoofing precious metals market trades, published September 29th, 2020. Okay, the bank is also nearing a settlement of $920 million to resolve government investigations for similar alleged conduct. Yeah, I mean, thanks for sharing that. I mean, wow, that's a lot of money. But all right, so be sure to tell us what you think as well down in the comments below.